Hello guys, welcome back to the channel, and this is Hassan again with another banger, with another video. So guys, our strategy has been working out very well. So today I'm going to give you another video on how the strategy has been faring on gold, that is pair shell USD XAU USD. So last week we did some analysis on gold, and fortunately or luckily it has tried to play out like we analyzed. So I'm going to be sharing with you the analysis and what we are expecting so far. Also, I saw some videos online about people analyzing gold, but hey guys, things are terrible out there. Things are terrible. So without further ado, let's go to the charts. But first, subscribe to the channel as usual, because it is the norm of the channel. We are growing to 200 subscribers. So far we have only 148. So be the 49th and 50th. Let's grow to 200 subscribers by the end of this month, guys. That is our target. So I'm giving you 5 seconds. Subscribe, and then we shall go straight to the charts for our simple analysis. Subscribe, guys. Okay, there you go. I hope you have subscribed. So let's proceed. I'll go direct to the charts and show you what we expect. I told you our analysis is simple. We use top-down analysis combined with supply and demand for entries on the lower time frame. On the lower time frames, I mean 4 hour, 3 hour, 1 hour, 2 hour. Rarely do we go to the 30 minutes. We only use the 30 minutes if we think the entry is too risky and we need a confirmation before we enter what you guys call confirmation entries. That is now when we go to the 30 minute, but we rarely do go to the 30 minute. So let's proceed. What do we see? We see gold on the 3 hour time frame. However, we start from the high time frame and we drop down the lower time frame. So I'll start from the weekly time frame to do the analysis. So what do we see? We see the weekly time frame with big candles. So price was going up, made a rally, a base, a rally. So we expected price to come and pick orders here and then go with them up. However, it did not. So what happened? Price came here, rejected, down like it was going to pick the orders. It did not, unless you mark this candle too big up to here, which was going to make your risk to reward very big, because your stop losses then would have to be from here where you mark the candle to around here or here, which is around 1000 pips on gold. It is not worth it. So that one you just had to ignore. So now when you come to the next weeks, they were just ranging. This one went down, this one went up a little bit, this one went down. You see, when this one went up, you thought we were going to buy because we broke the previous opening price of this candle, but then the next week came down and broke the previous opening price of the bullish candle. Then you said, oh, now we are going to sell up to this demand zone. Oh, that was not the case. The coming week broke up the previous closing opening price of this candle, and then you're like, what the fuck is going on? Because this one is going down, the other one is going up, this one is going down, the other one is going up. Like, it was a zigzag. All this was to make money lose, to make traders lose money, especially lower time frame traders. This was to make them lose money. So you came to the next week, it started, came down and closed as a rejection. So you're wondering what is happening. Then when this one opened, you thought, now since this one closed as a rejection, this one is going straight up. It went up, then closed as a rejection to the downside. So this whole thing here was just ranging. This whole thing here It was just what we call a ranging market. And why was that ranging happening? Because you see, for every move we have, there's always a resultant ranging before we can make another leg down, or we can make another straight leg up, because the market needs to breathe in. You see, when we came from here up to here, it was a little bit choppy, but it was linear, it was straight up. We ranged for how many weeks? We moved, let me count for you. We moved for 119 days, that is around 3 months. We moved for 3 months consecutively going up, and then we started the range from here. We ranged for 49 days, that is 1 month and 2 weeks. We moved for 3 months and we ranged for 49 days. So when then we started a bullish trend which moved for 3 months again. The bullish trend moved for 3 months, and then the ranging started from here up to now, which is 49 days. So it looks like, according to that simple analysis and formation, it looks like we want now to start another bullish move to the upside. So what should we be doing on gold? Be looking out for only buy entries to the upside. That is how it looks like. And when you get an entry with a sniper stop loss, hold it for some good time. Okay, so let's proceed to the charts. So now what picture do we have? First of all, we know gold has been bullish. This was just a resultant ranging from this uptrend. So what do you do on the weekly? First things first, you're going to identify, do we have any demand or supply zones on the weekly that are near the price? No. Down here, this is very far, and we had this rejection, and then we have this bullish, strong bullish move. So this one is very far, and knowing the fact that gold is in an uptrend, chances of it coming here are very low. So we shall be looking for buys. That is our immediate reaction. So when we are looking for buys, what are we targeting? We are going to be targeting these highs here that we rejected. Those highs that are going to be our initial target. So what do we have here? We have this our wick which opened from down here. It's a bullish candle. It opened from down and then closed from up here. Remember guys, we did this analysis last week, and then closed from up here. So this is the new candle. This is today is Monday. This is the opening. So we shall just mark this candle like this, such that we don't get lost. So I think now you can see this up here is our target. This is the opening price. This is the closing price of last week. This is the current week, the one that we are going to trade from. So what do? We go to the daily. Now that we know our weekly target, we know our opening price and closing price of the other week, we go to the daily. This is the target that we expect. We go to the daily. So when we go to the daily, what do you see on the daily? You see very big candles, and I want this analysis to be step by step. So now when you go to the daily, you see very big candles, but it is now time to adjust to the right closing prices on the daily. So you put this one here. I think this one, you come to the closing price of last week, which is here. Okay, so now you have the right points. 1 2 1 2 3 4 5. This one has to be on the closing price of last. No, this is our target. The opening price is here. Good. So we are good to go. So now, what do you see on the daily? You see price in making a green candle. However, this is where our week is starting from. This new week is starting from. So today is Monday, so this one should be Monday here. It is Monday. You check down here, Monday 9th June 2025. Okay, so why did we close the week from? We closed the week from Tuesday 6th June 2025. This is where we marked the closing price. So where was our, you remember our narrative, it was to buy. So when we want to buy, where do we buy from? We buy from demand zones. So where is our demand zone? You had a beautiful demand zone here. had a beautiful demand zone here, but it is big because this is the delta time frame, and you know how gold can be big. So you have to look for areas whereby you're going to refine this demand zone into something smaller that can accommodate stop losses of lower time frame traders and small account holders. So what constitutes of a good demand zone? We just have to map an indecision candle and then a huge engulfing candle or a big move away from that indecision candle. The number of indecision candles does not matter as long as it is from 1 to 4. That is good. The move away has to be good and genuine. Okay, so after that, what do we need? We need to go to the lower time frame like the 4 hour to refine. Wow, guys, look at the movement already. And this is the live market. Look at the movement already. So we need to go to the lower time frame to refine this. Where do we refine this to? We refine this to the opening price. This was the opening candle. This one opened on Monday 2nd last week, which is where even the demand zone is. You see, guys, this is an indecision candle. This is a very big push away from price. So what we're expecting is price to open, come and tap into our zone, take our orders and start going up. And this is exactly that what happened. The day opened from with this candle here. This candle came down, tapped into our zone, and it's currently going up. So if you had put your buy limit orders here with your stop losses slightly below there, right now you'd be in 200 pips going up. 200 pips going up. So this is the 4 hour. Did we have any more refinement on the 3 hour? It is not there. It is still the same thing, and the 3 hour is more clear. And I have another demand zone here. Is it valid? Yes. But remember, the laws of demand and supply state that if we have two conflicting demand areas, the extreme demand is the one that you should consider. Why should you consider the extreme demand? Because there are more orders here. There are more orders here and here. So what happens is, in order to fulfill all of them, you will come and fill the downer one. By filling the downer one, it means you have also filled the upper one, because you cannot reach here before passing here. So you'll come and sweep the liquidity down here, fill the downer one, and then proceed to the upside. So that is what the analysis says. So now someone will ask me, now the trade has already happened. How do I get involved in the trade? Remember, we are looking for only buy positions. So right now, so far we have moved 200 pips from the top. And look at the entry, guys. Sniper entry. This one did not reach, but this one gave you a sniper entry. Just smelled inside and then turned around. Okay, so now let's proceed. I know someone is asking that, oh, now how do we take advantage of that? How do we enter? So we shall proceed to the down or lower time frame to see whether you guys can have some kind of entry. Let me just make this one clear here. Let's proceed and see whether you guys can have some kind of entry. So when I see here, this is a low, this is a high, lower low, break. There's a QM formation on the 2 hour. This is a low, this is a high, this is a lower low, this is higher high. So lower low, higher high. This is a break of, this is a change of character, which means we have confirmed that we are going up. So what happens is, when we're looking for ways we can take advantage of this, I see something, guys. Hang on. So this is a low, this is a high, this is a, you see on the 2 hour there's a change of character. Even the 1 hour, that change of character still stands. So you remember this line, this was the closing price. This was the closing price of, this was the closing price of our week. This is where we drew the closing price. It has to be somewhere Friday. It has to be Friday here. This was the closing price. And you see the closing price, we have a demand zone that has been created. This candle here, this is an incision candle and then a big push away. So let's highlight this candle, or we mark it. We mark it very well like that. So then we proceed to the 30-minute. Oh guys, I think this trade has also happened, this entry. You see the 30-minute low, high, lower low, higher high, creating a QM, and then there is this demand zone. And you see guys, trust me, the markings that I have, they have a very huge impact. You see this marking was done on the weekly, but even on the 30-minute, it is having an impact. You see price come, sat there, tried to reject up, it was broken, used as resistance, broken, used as support, and then went up. So it is made a demand zone here, and it is retracing and looking up. So people who would want to buy, if you see this video right now, you can buy. You can buy gold, then your stop loss is going to come below. Buy from here because the trade is already in play. Stop loss is going to come below there. That's going to be 120 pips. If you buy now, 120 pips if you buy now, or 12 pips if you're using 0.01. Then your target is going to be this immediate supply zone, this supply candle here. That is going to be your first target. Then you remove some of the lots and then move stop losses to here above break even, and then hold. Let you see where price is going to take you. That is what I see. But this trade has already started to play out on the, even on the 30-minute. I don't go below the 30-minute, so I don't know what the people on the lower time frame think, but you can use that same analysis and find your entries. But the right entry was down here. So guys, that was our analysis last week, and it has played out very, very well. Top down analysis using demand and supply for entries. Simple, clear, and straight to the point. So that is all for today. If you've liked this video, kindly like and hit the subscribe button. Also, don't forget to ask anything that you have not understood. Like the video, and also guys, subscribe. We are heading towards 200 subscribers. Subscribe to the channel. That is all for today. Bye.